Morning, guys. It's Thursday, May 29th, 5:24 a.m. Central Time. Grain markets are mixed this morning. July corn futures down 3.5 at 447.5. July soybeans up 2 cents at 1050.5. July Chicago wheat down 1 3/4 at 528.5. July Kansas City wheat down a half cent at 524 3/4. July spring wheat up 1 at 604 1/4. We had some tariff news out last night. Let's start there.
A U.S. trade court has blocked President Trump's global tariffs. On Wednesday, the U.S. Court of International Trade in Manhattan ruled that the tariffs are illegal. The decision came from a panel of 3 judges who found Trump misused emergency powers to impose the tariffs. The ruling is a major setback for Trump's economic agenda. However, late on Wednesday, the administration did file an appeal on the ruling in federal court. Since the tariffs were announced back in April, global markets have reacted with extreme volatility.
Trump used something called the International Emergency Powers Act to invoke the tariffs. It was signed into law or approved by the Carter administration in 1977. And this court says, no, you can't do that. So Trump's going to appeal. It's going to go to an appellate court and potentially the Supreme Court. Bloomberg had a pretty good write-up on this. They said, this is one quote here. It's unclear just how fast Wednesday's ruling will go into effect, with the court giving the government up to 10 days to carry out the necessary administrative moves to remove the tariffs. But if the decision holds, it would, in a matter of days, eliminate the new 30% U.S. tariffs on imports from China, 25% tariffs on goods from Canada and Mexico, and 10% duties on most other goods entering the U.S. So this is potentially a big deal depending on what happens with the appeals. You notice the grain markets didn't really do much on this. We kind of opened up higher last night and then we backed off. Where you're really seeing the strength is in the stock market. The S&P is up like 1.5% this morning. So you've got some optimism there. I guess my thought would be that, soybeans, corn, whatever, we never really sold off on the tariffs. You had a 2 or 3 day sell off in the grain markets following the April Liberation Day stuff, but that was it. And then we recovered and got it all back. So some of this stuff is going to remain in place, like the Section 301 tariffs on China. That stuff has been in effect since 2018 and remained in effect through the Biden administration and now into the Trump administration. So that stuff stays on the books. It's this IEEPA stuff, if you guys are watching in the blue, that is potentially could be eliminated. U.S. customs duties hit an all-time high in May. They're going to be over $20 billion this month, the way that it looks. But it's all in question now. Does that mean that China comes in and buys U.S. soybeans and cancels their tariffs? I don't know. This is going to be a fluid situation, and we have not heard the last of it.
Corn and soybean futures declined on Wednesday amid an accelerated planting pace. The July 25 corn contract fell nearly 9 cents, settling at $4.51 per bushel, and the July 25 soybean contract dropped 14 cents to close around $10.49 per bushel. The USDA reported on Tuesday that planting progress for both crops remains ahead of schedule. Futures were also pressured by recent rainfall across the Corn Belt, which has supported crop development in some areas. Meanwhile, wheat futures edged higher as crop condition ratings fell short of market expectations, with the July 25 SRW contract rising nearly 2 cents to settle around $5.30 per bushel.
With regard to corn, old crop futures led the way lower yesterday. There was some chatter or rumors circulating regarding cancellations of old crop U.S. corn export sales. And I don't know if there's any validity to that. Maybe that makes sense given the fact that old crop led the way lower. Looking at some new crop charts, December corn has not acted particularly well. 4 consecutive lower closes. Today would be a 5th. That low that occurred in mid-May was 434.5. I suppose a test of that area looks a little bit more plausible right now. Bean market has acted slightly better by comparison, but has also backed off during the last couple of days. I've got kind of a differing opinion on why the market sold off. So let's go to weather.
Weather models continue to offer conflicting forecasts for the U.S. Corn Belt. While both the Euro and GFS models offer near normal rainfall for the region as a whole over the next 2 weeks, the placement of the predicted rain is variable. The GFS forecast is drastically drier than the Euro in the western U.S. Corn Belt. Specifically, the GFS calls for below normal rainfall in Iowa, Nebraska, and eastern South Dakota. The Euro, meanwhile, calls for some drier than normal conditions in the eastern Corn Belt and a more normal rainfall situation in the west.
So you look at the maps here, and this is 10 days through June 8th. And the big difference is in the West, like the western half of Iowa and then Nebraska, the eastern part of South Dakota. The Euro has rain there. The GFS does not. When you go out through the 14-day period, you've still got quite a bit of rain in a lot of areas. The Euro is more aggressive with the rains in the West, but even the GFS offers some rains in the West, although I would note that it's fairly minimal for parts of Iowa and parts of Nebraska. According to our friends at Crop Profit, based on Euro model data, the U.S. Corn Belt is expected to see 107% of its normal rainfall over the next 14 days. According to the GFS model, it's 106%. The location and placement, however, is variable. There has been and will be some debate about which model is better. Our friends at Crop Profit posted this on X yesterday. Recent verification using Crop Profit's point-in-time weather forecasting API shows that the Euro outperformed both the GEFS and the GFS across all lead times, 1 to 5 days, 6 to 10 days. So the Euro has been better as of late. But I'll tell you what, when you step back and you look at these maps, there's just too much damn rain here. There's too much rain for a regular seasonal crop scare event to occur. The market and traders, the way that they look at this is on a national scale. Yes, there are problems. There are planting delays in Ohio. It's too dry in Nebraska. It's too dry in parts of Iowa. I understand all that, but on a national scale, there's enough rain here and it's not going to cause a concern. There's no such thing as a perfect year. This is not going to be a perfect year, but there's enough rain in enough places that I think the market is just disinterested. I don't think that this forecast is going to convince anybody at this point in time that they need to buy corn or soybean futures based on weather. So if you're looking for a reason for the sell-off, yeah, maybe there's some validity to the cancellation stuff, but I'm just seeing too much rain in too many places.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video with Matt Bennett?
Everybody wants a June corn rally. I think that personally, and this is partially my fault, people have become hyper aware of the seasonal tendencies in the corn market. I think partially because of social media, and there's just a lot of like people posting seasonal charts all over the place. So corn futures typically top on June 8th. You know, that's the average date over time. Everybody knows that now. Whereas maybe 5-10 years ago, maybe everybody wasn't as familiar. So now everybody's looking for this June corn rally. And when everybody's looking for something, it very rarely happens. Matt Bennett was on yesterday and we discussed that. We took at least 20 or 30 questions from our premium subscribers, a lot of like situational grain marketing stuff. I've got this many bushels to price by this date. What are your thoughts? Really great stuff from the premium crowd and excellent stuff from Matt. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. We do a news show here for free on YouTube and on the podcast. In the premium videos, we do stuff that is more actionable, stuff that more will drive you to make a decision, whether it's cash grain marketing advice or crop insurance or policy. Paul Neiffer is going to be on today, and he's going to discuss the big, beautiful bill as it relates to farmers, farm bill type stuff, crop insurance, all of that. Go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of info direct from us every single business day, guys. Check that deal out this morning.
The Trump administration is targeting China's chip design capabilities with new export curbs. The U.S. Department of Commerce has directed American providers of electronic design automation software, also known as EDA, to halt sales to Chinese firms. The goal of the restriction is to hinder China's progress in developing advanced AI chips. Since 2022, the U.S. has imposed restrictions on the sale of advanced chip design software to China. In response, Chinese EDA companies have accelerated production and are steadily increasing their market share. The export curbs come amid the 90-day tariff truce between the U.S. and China, raising concerns that they could disrupt the fragile agreement and escalate bilateral tensions.
This news is probably not likely to drive China to buy U.S. soybeans. China hasn't bought any new crop beans yet out of the U.S. I think that they will. I'm almost positive that they will. As it typically works, U.S. beans become competitive in the fall post-harvest, and that's when China will buy beans, or they'll buy beans for that time frame. I don't think this year is going to be any different, but the perhaps increase or slight increase in U.S.-China tensions, always something to pay attention to.
India's abundant wheat harvest has eliminated the need for imports this season. The government estimates production will reach a record 115.4 million metric tons, approximately 9% higher than last season. despite earlier market speculation that India would be forced to import wheat due to depleted stockpiles and rising domestic prices. The strong harvest has ensured self sufficiency. Improved weather, climate resilient seeds, and adequate soil moisture contributed to this season's robust crop. Additionally, a 15% increase in wheat prices over the past year incentivized farmers to plant more wheat. India's self sufficiency, combined with robust global production and weakening demand from China, is expected to put further pressure on global wheat prices.
Gosh, the wheat market sucks, and we could have really used a shot in the arm here through some additional export demand, and we're not going to get it, not from India. India is the second largest user of wheat domestically on the planet, behind only China. But as Mackenzie mentioned, they are super self-sufficient. They don't import much. They don't export much. They just kind of keep to themselves, and it looks for another year as if it will remain that way.
The USDA is expected to resume imports of Mexican feeder cattle by year's end. Imports are temporarily halted due to the northward movement of New World screwworm. The most recent confirmed case was reported 2 weeks ago, approximately 700 miles south of the US Mexico border. Mexico has reportedly been working to contain the spread of the pest. However, US officials have said here recently that the country could be taking more effective measures. On Tuesday, cattle futures fell sharply after a false report claimed the screwworm was found in Missouri, though it was later proven untrue. If the screwworm were to somehow make its way into the U.S. cattle herd, it could be devastating for the industry.
Okay, so two things. First off, if we resume Mexican cattle imports by the end of the year, what is that versus expectations? Is that sooner than what people expected? Is it?
I don't know what people's expectations are, to be the truth, because we went back and forth on this since
Yeah.
November. In my opinion, it seems way too soon because here just a few weeks ago, we had government officials saying like, "Hey, you guys aren't doing enough, and it's moving too far north." 700 miles south of the U.S.-Mexico border, in all reality, is not that far. So, just in my mind, it seems a little soon.
Second thing, tell me about the events that occurred on Tuesday with this fake report of screwworm in the U.S. What exactly happened?
Right. So on Tuesday, someone put out a report that looked exactly like the press releases that come from USDA,
Mhm.
almost exact. And it said that screwworm was found in Missouri. And of course, that caused the markets to tank. We sold off big. I think feeders were down anywhere from $4 to $5. And that report was quickly proven to be untrue. However, there is now speculation that someone did that to do this to cause the market to tank and to basically manipulate the market. And some people are actually calling for an investigation into the situation. But I want to say that just that false report, it shows how devastating that screwworm could be for the industry if it were to get here.
I'll tell you what, as we continue to do news in the AI era, as it gets better and better and better. I mean, have you seen some of these videos with like that they were totally AI generated, but they look 100% real? I
Yes.
mean, how long is it before like there's a fake video of Trump saying something that moves the markets? Or I mean, I think we're pretty close to that.
Yeah. I'd say we're darn near almost there.
Yeah, we're gonna have to be very, very careful with, and we are very careful with our news sources and like where we get stuff from. But in the era of Twitter and Facebook and social media, bad stuff and untrue things can circulate very, very quickly. What did cattle do yesterday?
Cattle futures declined. Live cattle were 87 cents to a buck 20 lower. Feeders saw losses ranging from 247 down to 282. Box beef prices were higher. Choice was up 357 at 365.42, and select was up 91 cents at 351.74.
Stock market's up, I think, largely on the tariff news. The Dow's up 230. It was drastically higher than that even at one point overnight. The S&P's up 68. Treasuries are off. U.S. dollar is mixed. Crude oil is up 37 cents in the July WTI at 62.21. Have a great day, guys. We'll be back on Friday.